Taking a look at today's interest rate markets, let's look at the 10-year note futures as they're recovering from some early selling pressure to move higher on the day. 10-year note futures coming off the intraday lows to move higher, currently priced right around 112.10, which is just off the intraday highs and also would be a new 6-session or better than 1 week closing high if we were to settle here, as we are just a couple minutes away from settlement. And when you look at some of the factors contributing to the price action, initially, stronger than anticipated CPI data certainly had an impact early in various asset classes, as we did see some volatility. And with that, 10-year note futures sold off quite a bit and held down there early throughout the early part of the session. But then as we moved through the session, some recovery, and then we had the 30-year auction results, which were better than anticipated, strong demand there, as well as central bank speaking points highlighted by ECB President Lagarde. And those factors appeared to be enough to change the sentiment in the market and move the Treasury markets higher in price and lower in yield. And that certainly played out on various parts of the yield curve today. Now, looking at the 10-year yield, it's down, what do we got, about 5 basis points today to 398 basis points. About a 10-point range today, but the bigger impact today has been in the shorter end of the curve, where we're seeing much higher prices on the 2s, 3s, and 5s. So the yield curve inversion is narrowing some today, and we're looking at that 2-year yield down a bit more than 10 basis points on the day. So shifting dynamic, and looking at the CME FedWatch tool now, it's 68% chance of a cut in March, and that had actually moved to less than 50-50 after the release of the CPI data this morning. So again, shifting dynamics here today. 10-year note futures recovering nicely, closing at a better than 1 week high.